Hi CA students, let's revise CA Final AFM Chapter 13 Business Valuation Illustration 4. Using the chop shop approach or break-even value approach, assign a value for Cornet GmbH whose stock is currently trading at a total market price of 4 million. For Cornet, the accounting data set forth in three business segments: consumer wholesaling, specialty services, and assorted centers. Data for the firm's three segments are as follows. So business segment data is given, segment sales, segment assets, segment income is given, and the industry data for pure play firms have been compiled and are summarized as follows. Okay, and some ratios are given: capitalization to sales, capitalization to assets, capitalization to operating income, and consumer wholesaling, specialty services, and assorted centers. Now let's see what is this pure play firms. Pure play firms are nothing but those firms which are specialist in the in that industry where our diversified business is having a segment. Let's say in our case there are three segments: consumer wholesaling, specialty services, assorted services. So pure play services will be pure play firms will be a company specialized only in consumer wholesaling, or only in specialty services, or only in assorted centers, and the data of that is given. Now why this is relevant and how this works, why we are using this pure play multiples. So when you are having, or when you are valuing a diversified company, like in our case it is that Cornet GmbH, each segment operates in a different industry, and we cannot use a single multiple for the whole company also. So what we do, we used to find a pure play firms in each industry. In our case it is consumer wholesaling, specialty services, and assorted centers, and extract industry averages for relevant multiples. Let's say in our case the industry averages are this: capitalization to sales, capitalization to assets, capitalization to operating income, those multiples. Then these becomes our benchmarks to value each segment separately. So by valuing this separate segments, we will get to know how that each segment is performing individually to the compared to the pure play firms, and that will be the correct valuation also, because in case of this diversified firms, there will be some conglomerate noise. So what is this conglomerate noise means? A conglomerate we know, right, as it is this unrelated businesses, multiple operates in multiple unrelated businesses. So their financial ratios are an average across all segments, which will not give the real picture of one line of segment. That's why we need to use this chop shop method to arrive at the correct valuation of the company or the firm. So in our case we have data of Cornet GmbH, wherein they have three segments, and three segments pure play firms multiples are given. So, and we know Cornet GmbH segment sales, segment assets, and segment income, multiplying with the multiple will get the theoretical values. Then average of the theoretical value will give us the theoretical value of the firm, nothing but Cornet GmbH. So going one by one, first capitalization to sales. So multiplying the numbers with the sales will give us total 40 lakh 5,000 for this capital to sales, and then capital to assets. Okay, this is capital to assets, this is not sales, this is capital to assets. and then this also segment assets, that is 28 lakh 80,000, and the third one is capital to operating income, this also operating income. So 56 lakh 50,000, totaling it and then dividing by the number of segments, which is 3. So we are arriving at a value of 41 lakh 78,000, which is nothing but the average theoretical value of the firm Cornet GmbH. Thank you.